brute force of global liquidity, and the momentum is so strong that bulls cannot put a foot wrong. I mean, it's that kind of a market we are in, that it really does not matter what the underlying valuations are, how things are moving in the small and the mid cap space, the fact that volatility is back. The market is just showing signs, at least large cap stocks are showing signs of new inertia. So let's look at the trader screen. As you walk into trade this Monday morning, what are we working with? Global cues are positive. Bear in mind, not only Indian markets are at an all-time high, Nasdaq is also at an all-time high. Net flows, both FI and DI, they are positive, which is very important, which is constructive. And what we actually saw on Thursday and Friday, especially Friday, we saw a bout of short covering. So an unexpected move on Friday, there was follow-up buying on Saturday, and we could see extension of that on Monday. So in all probability, what you're likely to see is that you're likely to see re-emergence of long bias and long trading bias in large and mid cap stocks. Mid and small cap stocks, they've started underperforming, but if large cap stocks are moving higher, I guess that churn will continue, which is getting more and more evident, which is getting more and more pronounced. But Friday's price action, in a sense, cemented the fact that the bias for the market clearly tilted towards large cap stocks, and Friday's price action, in a sense, now presses that reset button where if you are a short trader, you'll have to run for cover, which you did on Thursday or Friday or Saturday. And if you've been waiting for a moment of breakout, I think that breakout has arrived finally. Anisha, while we may look at India in isolation, we must also remind our viewers that Nasdaq is also at an all-time high. Global equity markets are in a good groove. So the performing markets in the world are two: India and US tech, which is Nasdaq. And both those markets are at a record high, and I can throw in Japan as well. That also is doing reasonably well. So while we may talk about India in isolation, the real tailwind, I think, is largely global in nature, and I guess that's where markets, in a sense, are getting a lot of comfort from. Now, for India, well, March is not supposed to be a big month, because you've hardly any news flow. You don't have any large, planned events. You don't have any large calendar events. So March historically could be a month where more than news flow, it really would be the bent of technicals, the global setup, and perhaps momentum. Now, luckily, we're on the right side of trade in terms of direction in large cap stocks. The chop and churn in mid cap stocks has started. I think that is the real deal. And what you saw last week, let's say a sell-off on Wednesday, we could be in for more such days where volatility in the mid and the small cap stocks will increase. But I think it is evidently clear that the macro tailwind, along with global strength, and the fact that we've seen a momentum breakout, these are three factors which, at least in the near term, will ensure the markets are headed higher. I see the market, moving slightly differently than what we've seen, and I see that the macro tailwind will ensure large cap stocks will do well. See, Aisha, whenever you have a strong global setup and strong macro tailwinds and micros in terms of taxes and auto dispatch numbers, then large cap stocks, they always do well. So I think we are at that moment where the market has gradually but surely started moving to large cap stocks. But like what we saw brutal Wednesday last week, I think March mein ek daur aane wala hai. I think you should be prepared for that.